Sydney. Leanne, welcome to you. The data dropped. The market kind of yawned and moved on. There was nothing kind of going to turn this one around today, was there?
No, Carson, that's exactly right. When we did have a look at that data dropping, we saw a slight fall in the market, but it really was just continuing the falls that we were seeing for most of the day. As you said, that housing finance data missing expectations, but didn't really see too much market reaction. Of course, over in China, we also did see some inflation data coming out, although that inflation level was unchanged at 1.6%. So again, didn't really provide any movement for the market today. As you say, a fairly disappointing start to the week, particularly given the fact that we had relatively flat leads coming from overseas markets, and of course we saw the Dow and the S&P continuing to trade at those record highs. So I do think it is fairly disappointing that we're seeing our market coming under a fair bit of pressure today, and of course particularly after quite a strong performance last week where we did close for the week up about 0.4%. As you said though, really being weighed down by that financial sector. We're seeing Westpac down close to 4%, although it is ex-dividend. We are seeing a lot of the other majors also coming under a fair bit of pressure. We're also seeing telcos and health stocks coming under a bit of pressure. Of course, over in the US, there was a bit of concern around some of those healthcare stocks, and of course potentially being weighed down by some weakness around the region. As you mentioned, materials and energy doing very well today. We did see a pickup in commodity prices, but of particular note was gold. We saw gold surging about 3.2%. It was its biggest one-day gain in about 5 months or so. So no surprises that we are seeing a lot of those gold stocks really holding up that materials sector. And of course we did see oil prices up close to 1%. So again, that energy sector. But as I said, fairly disappointing start to the week.
Leanne, let's talk Lynas, because today they've gone on the front foot. They kind of had to, didn't they? Because the chatter was out there about the state of the rare earths industry. If they said nothing, they'd have been punished. But let's be honest about it. The shares have spiked today. A year ago, they were 8 times more expensive in value than they are today. This stock's in wipeout territory.
Carson, you're absolutely right. We've really seen this stock continuing its tumbles. If we have a look at that chart, ever since about 2011, it's just been on a continual downfall since the start of the year, down a huge 80% or so. So it's really been coming under a lot of pressure, and particularly around concerns about that rare earths industry. We know that those rare earth prices have been falling. They are highly leveraged to those prices. So of course, really has been affecting the performance of this stock. Back on the 14th of October, they came out with a quarterly report, which actually did look quite positive. We saw an increase in some of their sales revenues, and we also saw some of their production costs reducing, and some of their positive outlook also provided a little bit of short-term confidence. But since then, that's only the 14th of October, we've seen the stock down close to 30%. So it's really been hit very hard. Of course, today coming out confirming or reassuring the market that the outlook for that rare earths industry isn't looking as bad as what the market is speculating. But I do think that this surge we are seeing today potentially could be short-lived. I think in addition to those rare earth prices coming under pressure, I think that the company actually still faces quite a number of problems, particularly in terms of their balance sheet, where their gearing is still very high, and I think there is a concern that they are starting to run out of cash. So I think that really remains a big concern. Even after we did see that equity raising recently, I think that potentially is only a short-term fix. And of course some of their high costs that remain at that Malaysian refinery as well. So I think within the business there still remains some problems in addition to those rare earth prices. So I do think potentially today's movement might only be short-lived, could continue to see it trading at those 10-year lows that we are seeing it at the moment.
Leanne, let's talk Crown if we can. CWN stock reasonably flat this session. I note just last week, DB it was actually, came out and retained a buy on it, talked about the obvious headwinds in Macau, but of the view that certainly the recovery will be there. It's just a case of when, not if. What's Bell Potter's perspective?
Carson, we actually remain of quite a similar view. We actually have quite a positive outlook on this stock, despite, of course, a lot of concern coming out of Macau. We know recently in terms of some of that near-term risk to the downside for those revenues in Macau. But overall, Bell Potter actually does remain very optimistic, particularly in terms of that Asian market. It's growing attraction in terms of the wealth over in Asia, and also some of their strong pipeline of assets, which we know is due to be released over the next 6 to 8 months or so. We have the City of Dreams in Manila coming out in around December of this year, and we also have Studio City over in Macau, which is probably due to be launched by about mid next year. So really that pipeline of assets to compensate for that strong demand coming out of Asia. We also do think that they remain pretty committed to returning excess capital to shareholders, particularly if we do see a lot of this Japanese concern sort of falling over in terms of legalising gambling over there. Potentially we could in fact see some of that excess capital being ramped up in the form of a buyback or potential dividends as well. So overall, in Bell Potter's view, they actually do believe that the business is tracking very well in terms of a lot of their targets, and they do certainly remain quite optimistic on the outlook, particularly coming out of that Asian market, looking at Macau and of course any potential increases in dividends as well.
Yep, we'll be following that with great interest. Leanne, thanking you so much.
Thanks, Carson.